Alright, we've talked about failure swings plenty, and this was the last relevant low before this one, right? So this was I was expecting some sort of retracement or potential reversal from this area. And you can see actually on the daily we did get this CSD here. But we swooped this low, and then so that's where I then go into the lower time frame to kind of hunt to see if there's some sort of reversal signature being put in. And if you look at the daily on silver as well, there was I believe SMT. Yeah, so there's a bunch of SMT down here, and you can see here's this low, April 25th, and then there's the April 25th low. So there's a bunch of SMT everywhere, but most importantly between these lows, right? So in that class we went over, I said I would prefer to trade away from manipulation if there is SMT. So failure swing taken or sell side liquidity paired with SMT. That is how I'm looking to confirm my narrative. And then what do I look for from there? I'd normally like to use the 30-minute or even the hourly. So here's your CSD. Just a down close candle that ran our areas of interest, and then it gets closed above here. So if we're looking at silver, same kind of thing. Here's that low at 18 right here, and the same thing is happening on silver, which is what you want to be seeing. You want to see both indices putting in the reversal, even though silver in this case is the stronger asset. We see the CSD, and then all I'm waiting for now is to see if there's going to be continuation after this gets closed above, which we do. So going into Monday, or I guess Tuesday night, I saw this expansion. I want the daily chart to be in an expansion phase, and then I want my lower time frame to be in an expansion too, right? So I see that once we run out some internal low like this, while sitting inside of this order block, right? The entire down close candle here is your order block. I'm gonna get rid of silver now, so just a little easier. We're inside of that order block. We're running out a short-term low, and then we continue to close above down close candles, and we continue to use those as support. So we're rejecting lows, and now we're displacing through highs, right? So same thing, using fair value gaps as support. We took the most recent internal high, come back down and rebalance, close above down close candles, same thing. So now what am I waiting for? My next key time. What's my next key time? Well, the new day open, which is 18 or 6 p.m. EST. Same thing, we're not looking for deep retracements. I'm expecting this to act as support. So ideally this was the entry. You wait for the confirmation after you get the candle closure above, and then you wait for the retest, which would be right there, and then your stop loss at the low. I was not on the charts at this time, and so I knew that once again price was in that expansion phase. How did I confirm that? Well, down closed candles are being used as resistance or support over and over. We have another small little fair value gap right here, and you guys see how every down closed candle, because we're in a bullish market, is acting as support here, and the fair value gaps are getting respected. That's how you know price is in a smooth, low resistance liquidity environment. Not just because you have stacked highs on one side, right? Low resistance means that price is respecting bullish PD rays really well. Notice how this fair value gap here got left open too. I'm noticing all of those things. So ideally, I wanted to wait for this 30-minute retest. But once again, um, price should not come back down here. And notice what the opening does. Open lows into a short-term low inside of a fair value gap and just goes. Now I know for a fact that this low does not have to be taken any longer. So I'm trusting that this is the low of the session and that my draw up here is still the main target. And I'm not worried about these hourly highs being resistance. I'm not expecting reversals off of these areas. This is too close to the main objective. And if you look at the 4 hour, the only relevant swing is that high. and this red dotted line is just the weekly equilibrium. So from this high up here, to this low, that's all that is. So now I have a premium liquidity pool, and I framed the entire narrative to go along with that. So same thing, I was watching price on the 30-minute, and again, I wasn't on the charts yet. This would be the best entry possible, besides the first one we went over. So I still wasn't even looking at gold, but this is where, again, a great continuation entry. Why? Price rebalances inefficiency using a down close candle as support, and we're closing above down close candles. In expansion phase, we're understanding that all of these lows should now be protected until the draw is met. What's the draw? None of these. This 4-hour swing high up here, and equilibrium of the range. So we play price, and once again, what did I do? Again, was going to potentially wait for a retest of this. Ideally, price should not retrace this much, especially if a fair value gap gets put in. So all I need to see is 15-minute order flow being continuously respected. What does price do? Digs into the 15-minute or 30-minute fair value gap. Either one works. Then we close above, again, another set of down close candles, and this is where I looked for my entry. So I actually got filled right at the high of this on my TradeOvate account, and my XFA didn't actually get filled, so I had to get filled a little higher last night. So I got filled literally right on this here. I got lucky on my TradeOfy account, and my XFA got filled a little higher, so it was like up here at 42.6, because I saw this and I didn't want to miss it because I knew what was most likely going to happen, and I held the entire position all the way to the high, and you guys can see what happens, right? Fair value gaps getting left open, prices continuing to rebalance inefficiencies, continuing to rebalance fair value gaps, and price continues to close above down close candles, and the rest is history. We're in an expansion phase, and it should be low resistance, no deep retracements, and you guys can see this entire price leg up is exactly what we just went over. Down close candles being used as support all the way up, fair value gaps being respected, down close candles continuing to get closed above, same thing all the way to the highs. That is an expansion phase of price. This is its classic signature, and this is the only time you should be putting on a trade. Ideally, you will be the most at peace with your position, and it will be the easiest, most stress-free you'll be able to have some sort of trade like that.